What's going on, guys? I just wanted to do a little updated video on NIO and see what we had going on here. Now recently I was looking at this chart and I was thinking, oh man, this thing is starting to look like it's setting up for a very nice potential, nice double bottom here with a higher low, and this thing is ready to start taking off here. I was getting in here, getting myself positioned slowly in this trade. I actually bought some today on this dip. Then I heard about the share offering and I was like, oof, that can't be good. Like, usually when you hear share offerings, they never go well. So I was like, man, maybe I'm missing something. So I'm like trying to figure out what could this be, and I'm drawing these trend line supports here, and I'm saying, oh, okay, well, we could be in a gigantic symmetrical triangle here. If we draw these wicks, this would work out perfectly. This thing looks beautiful and ready to, prime to take off here. And I'm drawing it like that, which could still be a potential possibility. And then I was taking my falling wedge, and I was like, oh yeah, we got a beautiful falling wedge here. It looks so nice, pretty clean, pretty clear support and resistance here. We got this nice falling wedge here. We got a resistance break tap right here at this $42 rejection, and then it looks like we're coming back down to this $36 range. We might bounce down it a little bit, potentially come down to this $34 range, and then get a nice beautiful rip back up through all this resistance, and just kind of make a nice, something like this maybe that we chop in here, and then we end up getting a beautiful freaking rip up to this resistance, which eventually could end up taking us up to $80 price target. Is that possible? It's still possible. However, with the share offering, we might have to reevaluate what this chart is doing. Now, of course, this can still be a large symmetrical triangle here that could eventually, even if it chopped here for a little while, have a very nice bullish break, causing a beautiful double bottom, and holy shit, we're all going to the moon here, right? But unfortunately, I'm seeing some pretty bearish indicators in this chart here now that I cleaned it all up and started redrawing a few things. So what I had to do was I had to go back to this original price action here and say, what's going on here? Well, the first thing that we can look at, and this is how I'm always going to chart stuff, because it's going to give us the best edge on the market. It's going to show us what we have for support and resistance, why we have this for support and resistance, why is it so critical, and so on and so forth. So, what we're going to do is we're going to actually just make this line red, because it might make it just look a little clearer, and it'll give us a little more of an edge. So basically what we can see here is when we had this beautiful uptrend, beautiful nice uptrend, ripped up, we double topped up here, triple topped here in this consolidation, and then we completely fell from this rising wedge. Okay, then we fell down. Everybody got bearish. Everybody said the thing's going low. I even expected it to go to about 26 bucks was my target, and hit $30, and it ended up getting a insane, I don't know if you want to call it a short squeeze or whatever. We ripped, right? Completely ripped. And then we got rejected once again at the same resistance that goes all the way back here, which, I don't even have it drawn perfectly. But if we drop this thing right to that perfect wick, now we can see perfect touch, perfect touch, perfect touch, right? So that's pretty clear up downward sloping resistance here. And as far as the upward sloping resistance that would potentially make up this symmetrical triangle, we can see a touch here, a rip, rejection, not quite a touch there, rejection up at this upper sloping resistance. We came down here to this potential support right here, the low of the move over here, and then a complete rip. And we came down and we started creating somewhat, and NIO's a hard one to chart because obviously this is a volatile stock. I was starting to see something else in the chart that I might have missed, but so then you know, once we had that big breakout here, we tapped resistance here, came down, had a breakout, fell back in, couldn't hold it as support, and we started chopping around in here. We had a lot of touches down in this roughly 42.50 to 42.17 range, and then we fell through and we started to chop around once again in the same kind of area here that had given us some support here in the past, which is, you know, roughly about this 38.15 to 38.28 level. And, you know, what we are doing what we started to do and could be still doing right now is potentially looking like if we drew touches off of these wedges here, drew it up like that, took this here, I mean, it's more or something like that, and we got rid of this line here even, we're kind of looking like we were chopping around in this, you know, maybe a rising channel of some sort here. And if we do continue holding this level, that would be a lot better if we can get a bullish breakout. I know I have a lot of lines here, so it makes it a little more confusing. But we pretty much need to continue to hold this support here, roughly around $37. We don't want to see ourselves losing that. And of course, if we did, you know, it's easy to make a case that we're just following down the end of this, coming back down to this lower support down here. That's possible. However, looking right now on the RSI, we can see pretty clearly here that we had this rising, that we do have this rising potential channel or rising wedge right here, depending on how you draw it, or a rising broadening wedge, maybe something like that. We're still inside this support, which is a good sign. We don't want to lose the support. We haven't lost it, so it's not a breakdown yet. That would kind of match up. But we do have this daily MACD cross potentially rolling to the downside. We have this 4-hour cross, which is clearly looking like it's going to just completely fall off a cliff, which is showing for our momentum, which is a very, very bad sign there. And you know, it's tough for me to even draw this line of support here that I have here, because it just, you know, there's just so much going on. I mean, maybe we could draw something like that. That might make a little more sense, which would give us a potential downwards target right here of this 36.89. And if we do get a nice bounce off of here, or even just go sideways, maybe we can have another break to the upside. You know, it's tough to say. However, looking at some indicators, if we look at the EMAs, we can see that, you know, we're kind of started to get squeezed here between the 50 EMA and the 20 EMA on the 4-hour. We had our 50 EMA cross our 200. We're looking like our 100 is going to come down across our 200, which could push us down pretty quickly. It's getting pretty windy out here. And then, you know, and the other thing I was looking at here was if this was some kind of descending wedge here, and we did break to the downside. Now we came back up, we back tested it as resistance, which would be, you know, a pretty clear indicator of further downside as far as that. And we also got rejected up at this 100 EMA, and then we had this 50 cross the 200 here, and the 50 looks to be rolling over here on the daily. You know, depending on how that turns out for us, we could end up rolling, but this 200 is also curling down. I mean, usually when all these moving averages end up on the downside here, it you know, it takes a little bit to get them to come back for us here. So it's not a good sign when we're below the 200 EMA, which is right around $45. So I mean, that's more of a bearish sign here. You know, and then looking here, we had our 50 rolling up above our 20 EMA here, which, you know, this could be indicating that we are heading into a further bear market here, because, you know, once you start getting all of these moving averages moving, and when your 20 is under your 100, your 50, and your 200 day moving averages, it's a clear sign that you're in a bear market here. And I actually don't even see our 200 weekly. This is actually a weekly chart. And then we can see here that our recent push up here, we got rejected between the 50 and the 20 EMA here, and that lies around this 43.11 area as far as the 50 EMA. So that's all based off of EMA there. So, you know, another thing, we have our Ichimoku cloud. Now, in the weekly, we are holding support on this weekly cloud. So that's a good sign right now that this is showing that we have a lot of support right there, which is a good thing. And then, let's see. Let me just take a look at the daily real quick. But on the daily here, we can see that we have this Ichimoku cloud resistance up here, where when we got back into this area here, when we did finally break above this 49 area, we had a moonshot, but obviously we got rejected, came back down, couldn't back test it, and now once again, we're below all of this cloud, where prior to this run up here, we were above this cloud. And when we finally broke back into it, we tried to maintain support, we lost it, and inevitably, since then, it had been completely acting as resistance until this fake break and the back test that was failed. So now, this is the daily, we're below all of this area, so that's not a good sign. So as long as we maintain below all of this Ichimoku cloud here, it's a bearish trend with a lot of resistance. You know, you can clearly see the flip. Above, bullish, below, bearish. That's obviously, you know, easy to say. Now, of course, if we were to potentially chop here for a while, and then we did get some kind of blast move out of here, then, you know, by the time we reached the end of this apex here, if this was going to continue just chopping here, then we would easily be able to make a case that once we get above this $44 range here, we'll have to look back at it at the time in case anything else, you know, starts building in the cloud here, which as of right now, it doesn't look like there's much going on here. Closer to you know, end of October area. If this is going to maintain the same way, then we can make an easy case that we might be able to blast up out of here by the time we get to those ranges. So that's the Ichimoku cloud, and then we have our EMA ribbon, which is also, you know, on a bright note, it's starting to squeeze here on the daily. You know, and we've been red on this cloud since you know, we flipped from green to red here during this whole time. We actually flipped on March 24th red, which we did have a nice run up, but we still couldn't hold it as support here. And we can see here that during this whole run here, although we didn't, you know, touch it very much here, we stayed pretty damn far away from it. When it did finally flip red here, we had a very, very big drop on the daily. And if we look on the weekly here, oh, maybe it doesn't show on the weekly. If we look on the 4 hour here, actually it shows pretty clearly, we started flipping red right around the top, around $63. And then when we flipped completely red here, this dropped out of that rising wedge, tried to hold support, failed to support there, and then we ended up having a massive drop and using it as resistance. It flipped green as we were breaking through here around this $42 range, and then look at it now, it's starting to flip red once again. So, you know, that's probably either going to indicate a further drop or it's going to indicate further sideways price action. So we can obviously clearly see here that I'm getting a lot more negative indicators here than bullish indicators, which, you know, is not in favor of, you know, the bulls. Now we can look at the Keltner channel indicator here and see what's going on. This is just something clear to look at here because it is something to take a look at. But we can see here through the whole run up to $65, this Keltner channel acted as beautiful support here on this middle line here. You know, it wasn't very often we dipped down. Maybe once there we dipped to that third line. Once again we kind of broke it there a little bit, but for the most part we stayed really about this middle line until about this little bit of a drop here from $56 here. We started testing this lower line here. And that was kind of like a warning sign here that, hey, throughout this whole trend, we only touched this thing once, and then now we're starting to touch this bottom of this Keltner. That's not a good sign. We had one more blast up here, and then the third time we came down to touch it, we lost it. And what did we do? We started getting resistance at the second line here. We had a touch on this upper line, still resistance, and then it got flipped to resistance. Eventually, right around this $39, $39, $40 level, we started noticing that we were holding above it. So that was a very bullish thing. Started using the second Keltner channel line as support, and then when we flipped, we ended up losing it, rejecting below it, once again not being able to close any candle bodies above it. We came over here, we ended up rolling over, couldn't hold support. And what did we do here? We rolled up, we touched the top of the Keltner, and once again we could not hold support. Now we're trying to hold support at the bottom Keltner line. Could that be a bullish case? It could be. We have to keep an eye on that, of course. And then as far as the weekly here, it does look like it's trying to turn itself into a very nice double bottom here. It could be a potential scenario. That's really why I'm so bullish, or had been so bullish on this thing. And it still could be. You know, we still have, really we have until like November 1st to decipher what we're going to do here. But as of right now, we are seeing a lot of resistance in this $42, $43 range. So to me, we need to get above this $43 range in order to start looking at this in a different light here. But for now, we have to kind of be a little bit more cautious as far as like short-term trading. And, you know, I mean, if you're going for long-term trades, I mean, I'm not talking anyone out of, anyone out of any positions. I got to take some water here. I'm talking so much. But, you know, as of right now, we're going to have to just keep our eyes really on the prize here. And it looks to me like that's really looking like 36.88. I may, just may, add a little bit to my position that I'm still in there. I'm going to keep an eye on it and see how we do. I've noticed in the past, we really just wick to it once, maybe twice here on the 2-hour time frame. So it doesn't give you much opportunity for a buy, which if you were bullish on this thing and you were like, I trust that it's gonna do all right, I'd be looking at this 36.83 here short term. That could be a level that we could expect to hold here. I still want this. I still wanted this to be like a nice falling wedge of some sort, and it could still be, but you know, it's just really tricky right now. But we can keep that there, just to keep that in mind, that, you know, depending on how this price action goes, whether it needs to fall down here lower before a breakout, I don't know how it's going to play out, or if it's going to even play out in this bullish way here with all the bearish signs I'm seeing right now, unfortunately. Let me see if I can find another indicator that might give us a little help. I have a lot of indicators here. We have some William alligators. This is going to show momentum, which is going to most likely be bearish. It's looking that way right now anyway. We can clearly see that on the 4-hour we're crossing negative. On the daily we're flipping bearish on the momentum. On the weekly we have been bearish on the momentum. We just had a lot of bearish crosses there. You know, we can easily flip back up, of course, but we'll have to keep our eyes on that, see if anything changes here. Looking at the 1-hour time frame, we just flipped bearish like as we were getting that dip. You know, that's just momentum though, strictly. Another thing that we can probably look at real quick, we could take a look at the let's see, what's the super trend? I know I had something here. That was a sell signal, but that's a 1-hour time frame. Obviously, it's showing a lot of resistance here at this 41.16 level. I mean, it still seems pretty clear to me. Wow, that's showing us a lot of negative here, but it is actually showing a buy signal on the 4-hour time frame, which is, you know, pretty strange. But we'll have to see how it plays out, because, you know, showing that buy signal there on the 4-hour time frame, although we're getting a potential MACD cross, is not a bad sign here for the bulls. You know, if this was some type of falling wedge here, obviously we can see we don't have much time left in that potential falling wedge, between the falling wedge and the lower support that I have drawn of that previous support here, based off of those wicks. And you know, can we see, we can't really call this that reliable, obviously, because it wanted us to buy here, which ended up falling a lot further. But then the buy signal came in here that ended up, you know, even if you bought here and bought here, we still ended up good. And it did give us a sell signal up there closer to the top. So, you know, I guess it hasn't been too bad as far as the buy and sell signals on that thing. That's a super trend. And maybe I'll just do one more and then I'll get out of here, because I don't want to bore anyone. CM Slingshot's been pretty good for me. That just flipped red on the 4 hour. We really want to see that to start to flip green. It hasn't flipped green. Slowly flipped green a little bit here, which, you know, it's starting to squeeze again. It's hard to tell if that's yeah, I mean, that's not even that reliable on the 1 hour time frame here. It doesn't look like it. You know, I haven't actually tried to make any buy signals off of this thing yet, but we can see that on the daily it's still flipped red. So, you know, really the key factor here, guys, is that we need to start seeing some daily closes above the $42 range and potentially above the $43 range to really start getting bullish here. And we'll have to watch it. That's all I got for you. Hopefully this is not too boring and this was helpful. Peace.